Salam. Welcome to Hawaii Tax Workshop, and this is for F1 students. So hopefully all of you are F1 students here, and joining us today are also people from Kapilani Community College. Hi. And today I'm gonna hopefully impress upon you how to do the Hawaii tax return. And it's something entirely different than the federal tax return. So what if you saw our federal tax workshop, that is separate from what this is. So please keep in mind what you learned today is only for Hawaii tax returns. And we're talking about 2016. So this is for anything from January 1 to December 31. Just wondering if I can see a show of hand, how many of you going to be doing the 2016 Hawaii tax return for the first time? So you didn't do any 2015. And what about, Kapilani, 3 of you? Okay. Well, we're going to go over the rules of the Hawaii taxes and then also go over 2 exercises. First on the form N11, that's for residents in case you become a resident of Hawaii. So it's kind of similar to the federal workshop where we use the same word resident, but the definition of resident is different for Hawaii versus federal. And also the word non-resident for Hawaii taxes is different than federal tax. So please keep those 2 separate. A quick example is if I live in California and I move to Hawaii December 1, I live in Hawaii only 31 days, I am considered a Hawaii non-resident. So when we use the word non-resident, it also includes people from the other 49 states. Whereas for federal taxes, non-resident means people from outside of the United States. So whereas for Hawaii tax, non-resident could be anybody outside of Hawaii plus the foreign countries. So you need to understand that. And we're going to go over some of the definition that you see in the instruction booklet to N11 and N15. I'm not sure if anybody got the instruction from N15 or N11, but you can also download that from the website, the state tax website. Now, as far as the major differences for Hawaii and versus federal, for federal, there are such things as tax treaties. Hawaii does not recognize tax treaties. So everything that you earn will be taxed within the definition. And federal uses a green card test. If you have a green card, you're a resident. Hawaii does not use a green card test. And we also talked about 2 days ago in a federal tax workshop, there's such a thing as substantial presence test. Hawaii does not use that. Hawaii uses a 200 days test and also a depends. The word depends is depending on your visa status. And I'll explain, F1 versus J1, and also military requirement. As you know, there are people who are in Hawaii because of military duties, and that's a different definition. So these are the similarities, between federal and Hawaii. First of all, for filing, it's the same. If you're married, you still file separate if you're non-resident. But if you're resident, then you can file together. And as far as dependency exemption, it's the same. If you're married and you're non-resident, you cannot put your child on the tax return. But if you're a resident, you can claim your child on a tax return. And as far as taxing on worldwide income, if you're resident of Hawaii, you got to report all income. But if you're non-resident, you only report Hawaii income. So that's pretty much the similarities for federal and Hawaii. Now you might ask, what is resident, the definition for Hawaii taxes? The first thing is, someone to be a resident, they need to live in Hawaii more than 200 days in a calendar year. So as far as calendar year, that means January 1 to December 31. And we're talking about 2016. So the question to you is, between January 1 to December 31, did you live in Hawaii more than 200 days? That's the first question. And if the answer is yes, then you need to consider item number 2. What is your domicile? So you can find the word domicile in the instruction to your booklet for N11 or N15. And as I mentioned before, it's on the website. The word domicile means the place where an individual has a true fixed permanent home and principal establishment. It's the place where the individual has voluntarily fixed the habitation of himself or herself and family. So that's the long definition. So hopefully, if you fit into all those definitions, you could be considered a resident for Hawaii tax purposes, even though you might have a F1, but I'll talk about F1, especially F1s. And the next thing to check about your residence status, you need to see if there are 3 things that you would do to establish being a domicile for Hawaii. The first one is, did you abandon the old domicile? Basically, are you saying Hawaii is my new domicile? And did you intend to establish new domicile? And did you actually physically live in the new domicile? So those are the 3 characteristics to establish Hawaii as the new domicile. So just to further stress the definition, when they say domiciliary resident, it has to be 200 years, more than 200 days during a year. And you're only in Hawaii for transitory purpose, meaning you're in Hawaii for a specific purpose, like studying as a F1 or doing military duties for 1 or 2 years, etc. But if you're a non-domiciliary resident, it could be someone, U.S. citizen or resident who live in Hawaii for less than 200 days in a year, or foreign student on an F visa. So if all of you are on an F visa, you could automatically be considered non-resident for Hawaii tax purposes. So hopefully, I'm not sure, but I think most of you should be F1, right? Okay, then J1 student? Okay, so you need to go through the test. If you're a J1 student, you need to go through the test that I described. Where's your domicile? Where's your current domicile? Do you believe your domicile is Hawaii or not? So that's pretty much what you have to do. Whereas F1 visa, it's already stated in the instruction booklet saying F1, whether they spend 5 years in Hawaii or 6 years, 7 years, if you still have a F1 standing, then Hawaii Tax Department will consider you as a non-resident for tax purposes. Now, as far as the filing requirement, who should file? This is the table. If you're married filing separate and your income is more than $3,344, you should file. If you're single, you should file if the same amount of income is at least the minimum $3,344. Then they have the other married filing jointly. So those are pretty much the requirement threshold. If you earn at least that amount or above, you should file a Hawaii tax return. As far as non-resident alien, this is the threshold. If you have income more than $1,144, whether you're married filing separate or single filing separate, you should file because this this number comes up because you already allow a standard, you won't be allowed a standard deduction of 2,200. That's why the number is smaller. It's 1,144. Now the other situation, like I mentioned 2 days ago, why you should file, even if you have a low income amount, if there was taxes taken out, especially on a W-2, you should file, then you can get the refund of the taxes taken out. Say, for instance, you have income of $100 and there's a state tax of $10. You should file even though it's below the threshold, because you'll get the refund of $10 if you file. But if you don't do anything, you won't get the $10. Now, there's only 2 tax forms you need to know for Hawaii taxes, Form N11 or Form N15. Previously, there was a third form, N13, but it no longer exists. So all you need to consider is whether you should file N11 or N15. N11 is for resident. So if you determine that you're a resident for Hawaii tax purposes, then you do N11. If you consider yourself as a non-resident for Hawaii taxes, you do the N15. Now, as far as the difference between those 2 forms, other than the obvious, is N11, you report income worldwide. Anywhere you get income, you must put it on N11. Whereas in N15, it only requires you to report income only from Hawaii. Everywhere else that you got income, you don't need to be taxed for Hawaii tax purposes. Again, is there a question? Can you use the mic, please?
For the first resident, you said, can you return? Sorry. It says for N11 and may qualify for low income credits. What is that?
Low income credit is only like if you have a small income, then there is a tax credit. So again, I stress, do not go for a lot of people rush because they said, oh, I can get tax credit. But my first question is, are you a resident? You know, if you're not even a resident, don't even follow the benefit of getting a tax credit. So unless you're N11, you know, I would advise don't even need to worry about what is low income credit. Low income credit is basically if you don't make that much money, then the government give you some tax credit. If they give you like say $45 and you owe 0, then you get a refund check of $45. That's as simple as that. But you have to make certain low income to get the tax credit. But the first question would be, do you qualify for N11? So do not just go for something that have tax credit if you don't qualify. So hopefully you qualify first. The other one is, as far as the tax return preparation, the procedures for N11, it's a little bit different in terms you have 2 columns. I'm not sure if anybody downloaded the form N15. There's a column A, there's a column B. Column A is total income. Column B is the Hawaii income. So when I go over the exercise, you'll see the difference of that particular form N15. And then under item number 3, you'll do a ratio of the Hawaii adjusted gross income, AGI, to the total AGI. So basically, column B divided by column A. And then you also calculate your itemized deduction if you have itemized deduction. And number 5 is you use the ratio to figure out the prorated itemized deduction. And then you get to the taxable income. And you use the tax table to figure out what your Hawaii tax would be. As far as N11 is different, you start off with your federal adjusted gross income. And then you add or minus any adjustments. and you subtract your itemized deduction, subtract your personal exemption. So even though the word personal exemption is a different amount. 2 days ago in the federal tax workshop, it's $4,050. The personal exemption is lower, is 1144, I think. Yeah. So 1,144 for Hawaii. So that's why I said what you learn in federal tax workshop is different than the state tax workshop, even in the amount. As far as deadline, it's April 20th. Whereas for your federal return is April 18. But for Hawaii tax return is April 20th. And just like the federal workshop, there's 2 addresses. If you have a refund, then you use the lower address, the P.O. Box 3559. If you have to submit a payment, you use the top address, payment section, P.O. Box 1530. So you don't need to write down this because this whole presentation is on the website of ISS. Is it on already? Okay. So you can always go back, and I believe this presentation is also recorded, so you can watch it at your convenience, besides the PowerPoint. Yeah. As far as the extension, which means you can file a paper called extension, I need more time, you cannot use the federal extension. There's a state extension, state form. So you need to file N101A to request more time, which is what we call extension. And it will give you 6 months. But when you ask for more time, you need to pay with the extension. For instance, if you know you owe $100, you cannot get a 6-month extension unless you attach the $100 check. And then at that N101A, then you can be granted the extension. Versus if you just send an extension, and when you finish your tax return and you owe $100, if you don't pay by April 20th, you'll get penalties. So to get an approved extension, you need to pay the tax on time. And you might ask, how do I know how much it is? Is it $100? The answer is you need to approximate. It might be $90, but if you pay $100, then by the time you finish your tax return, you get the $10 back. So you need to submit an approximate payment, and then they can approve the extension. They don't know whether your $100 is correct, but once you submit your tax return, then they know whether that $100 was enough. So you need to kind of estimate if you need an extension. If you don't need an extension and you can do it by April 20th, then you don't need to complete N101A. Now, you might say, what happens if I file after 20th? Obviously, there's underpayment penalty, and that's pretty much the criteria. It needs to exceed $500 for a particular penalty, 8% per year, and there's a failure to pay. So if you send in your tax return, but there's a tax due, they can assess your failure to pay if you didn't submit a check. So this is just a reiteration of what I just said. Now we're going to go over the sample of the tax return. Okay, the first one is let me look. Where's the slide? Okay, I got it. Oh, okay. Okay, this is N11, which is the resident tax return. So the hypothetical facts is this person and his wife and gonna file a Hawaii tax return. They both work on campus, and they have a son, and they came here in 2013. So it's similar to what you saw 2 days ago, but we're putting that number on the Hawaii tax return. So this is the copy of the example of the 1042S. Any of you got 1042S? Okay. So basically, this person, his wife, got 1,142, as you can see on box 2, and there was no tax taken out. And then the husband also got $2,000 without any tax taken out, as you can see on box 2. And also this guy, he made $7,896 on their W-2. So I assume most of you got W-2?
Yeah.
And as you can see in box 2, federal income tax withheld, 1,943. And then box 17, 696 state taxes. So if you consider yourself a resident, then this is the tax form. First of all, you put in your name, address, your social security number, etc. That's only if you consider yourself a resident. And again, it's 200 days or more, or you're not a F1. Or if you think your domicile is still in your home country, then you still can take a position that you're a non-resident. You have a question?
Yes.
Oh,
Can you press that?
yes, she did.
Hi.
Okay.
So I have a state ID, Hawaii state ID, but I think I've been in Hawaii less than 200 days.
Oh.
What can I consider myself?
Well,
Resident
my
or-
first question is, are you F1 visa status?
Yeah.
Okay. There is, I was going to look for my slide. There's an instruction in the Hawaii tax form that says F1 is automatically a non-resident. You don't need to go over the 200 days. So the first question you ask yourself, am I F1? And if the answer is yes, then you're a non-resident for Hawaii tax purposes. And as far as if you need to count days, then you ask yourself, January 1 to December 31, 2016, when did I arrive in Hawaii? Then you work that day. If you arrive July 1, then you calculate from July 1 to December 31. And then you figure out, is that 200 days? So that's pretty much the method. But if you're already F1, you're a non-resident. You don't need to do any calculation. So in this example, again, it's a resident tax return. So you can see that they start off on line 7, the adjusted gross income on the federal tax return. Then they make some adjustments. You know, things that were taken out from the federal tax return need to add back in. So line 8 was the adjustment for the 1042, the $2,000 plus the $1,143. And then the dividend was taken out, but now we need to add it back in, the $325. So your total income for Hawaii purposes is $11,364. You know, this is same example like the federal taxes, but it's applied on a Hawaii tax return. So if you go over what you saw 2 days ago as far as the amount, then you can kind of refer back to how this one is different. So this is just a blown up section of that page 2. And because the person is a resident, as a resident, you can get a standard deduction, $4,400 for married filing jointly. So you can subtract that amount. And when you subtract that amount, it comes out on line 24, $6,964. So then you go on to page 3 to figure out what your taxes is. There's also credit for food tax credit and credit for low-income household renters. And then on line 37, remember to look at your W-2, because it sounds like most of you had W-2. Then put that amount from box 17 of your W-2 on line 37, the 696. Then because 696 is bigger than the tax calculation, then you have a refund of 1,032. So that's pretty much the N11. Anybody question right now?
I have a question. I don't know how I declared here when I came because I have a husband. So if I declared that we are going to file jointly, but he got a job as a J2 and he declared himself as married filing separately. So both of us do this, let's say, if we are resident.
Are you J1 student or non-student?
J1 student.
Okay, J1 student, you would need to take a stance as domicile or not domicile. Then if you, and it has to be a realistic stance, meaning it's not for your tax advantage. If you're gonna say that you move domicile, you're resident, then you need to answer the 3 characteristics. Do you intend to move to Hawaii? Are you permanently going to be in Hawaii? And are you going to leave your old domicile? So if the answer to those is yes, 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 then you have a better position to take the N11. Then you can file together. You know, if your husband make $100 and you make $200, you need to put $300 on the tax return. Then you can file jointly, and it's the tax calculation is based on married filing jointly. But that doesn't stop you to file separate if you want. It's an option. You can, you know, some people like to file separate because one making more income and one making less. But if you put it together, you might still pay less because the married filing jointly tax return might be paying less on a tax structure is less. So what I'm saying in that instruction is 100 and 200, if you do the tax separately, might be more than the tax on 300. So, you know, it's you need to calculate it. But again, you know, what is your domicile? So that pretty much is the N11, but I think most of you are going to do N15 if you're F1, right? Kapilani, you have any questions? Okay, can you press the mic, please?
Hi, I have a question. Like, I came in August 2016 and I get my job in December. So, I get my job in December 2016. I start working. So, I did not earn too much. Like, my first check was just $64. So, still I need to fill this form?
Well, there's many questions from what you just stated. When you first got your check of $64, was that in January of 2017 or not?
Yes.
Okay. So for individual, you know, like individual person, the tax accounting way is cash method. So for those of you that took accounting classes, then you would know. But for those of you who never take accounting classes, cash method is recognizing income when you receive it. So if you received it in January for, say, the week of December that you work, it's a 2017 income because the check was issued to you 2017, and therefore you will not get a 2016 W-2. So based on what you mentioned to me right now, it appears to be a 2017 income. So it would not, that 60-something dollars is not income for your 2016 tax return. So in brief, you don't need to worry about that one.
Yes, thank you.
Okay, thank you. Okay, go ahead. A person in light blue.
Already on. Already on.
Hi, actually, I'm not sure which form should I use, N15 or N11. So, according to the PPT, so F1 students should use N15, right? But it says non-resident. And when I participated in a federal tax workshop, so I was determined as resident alien. So which one should I
When you said,
use it?
sorry, when you said you were determined in the workshop as resident alien, are you talking about the substantial
So because
presence test?
so I came here 2011.
Are you F1?
Then I stay here, yeah, but still F1, and then my income is all from Hawaii. So,
Right.
but
So
the
if you're F1 and you still remain F1 for 2016, then you're a non-resident for Hawaii purposes, even if you're a resident for federal tax purpose. So
okay, so should I
yeah, I can
use
allude you. I can refer you to that page on the instruction. As far as it states, F1 is automatically a non-resident for Hawaii tax purposes, because
Okay.
you're here as long as you get education under F1, and then you intend to go back to your home country after you finish your education. Whereas J1 is could be either way. J1 could stay afterwards. They might want to become a H1B. Whereas F1, it's probably staying for whatever education they intend to get, and subsequent to that, they intend to go back home. And that's why they use the word transitory purpose. You're just there for the purpose of the F1, which is to get the specific education that you're seeking.
Okay, so I should use N15 form for Hawaii state tax form, but the federal tax form is different. You know?
Yes.
Okay.
Yes.
I
2
see.
days
Thank you
ago,
very
we have the
much.
federal tax workshop, and you can always go back to the PowerPoint to look at the federal tax workshop.
Okay, thank
Okay.
you.
Okay, go ahead, Kapilani.
Hi, I'm a F1 student. I've been working on campus for 2 years, but this is the first time I work on the tax return. Is it possible to get tax return from 2015 or?
Sorry, what was your last sentence? Your question, is it possible to get what?
Tax return from 2015, or can I just
Oh,
do for?
okay. If you're asking for a blank tax form for 2015, it is on the web, irs.gov, as well as the State of Hawaii website. So you can get
Okay.
the blank form if you feel like you should have report taxes and income for 2015. So again, 2015 means January 1, 2015 to December 31, 2015. I always
Right.
stress that because a lot of people seem to forget the dates, even though you would think that would be obvious. But it's always January 1 to December 31 for each year. Okay?
Okay, thank you.
All right. So this is the last page of all the necessary schedules on your screen, like Schedule X. Again, this is only for resident. So if you're F1, it probably does not apply to you. And this is the Hawaii tax table for N11. So if you never used it before, it seems like most of you are filing for the first time. So you look at that particular number that you have on line 26 for N11. And if it's between, say, 200 and 250, and you're single, then the number is 3. So in our example, I highlight in yellow because the taxable income was between 3,500 and 3,550. And because you're married filing jointly for Form N11, the tax is $49. So that's pretty much how you look at the table and use. calculate the tax. So this is like a summary sheet that you could use, just like the federal tax workshop. You look at your W-2, what amount was in box 1, and on your right it will tell you where you could put it on the Form 11. So this is pretty much a summary form that should help you to do the N11. I'm going to go over the N15. So the facts are the same, but we're putting this on the N15 now instead of the N11, assuming the person is F1 status. So just to repeat, the 1042S for his wife is $1,143. The 1042S for the individual is $2,000. And the W-2 for him, which you saw earlier. So this is the N15. So hopefully, did anybody download this booklet, instruction booklet? It should look like that, but you can get it on the website. And if you don't know where the website is, you can come back to this PowerPoint and you can see the website down there, I think. Otherwise, you can always Google and get it. So these are the changes that you need to know. A lot of time you don't need to know. Okay, so on page 5 of the instruction, if you see it, the screen on yellow, once you get the instruction, you'll see how they define resident on page 5, top left corner. So when they say resident, it's, if you can see this yellow on the screen, it says this presumption may be overcome by evidence satisfactory to the department that the individual maintain a permanent place abode outside of U.S., the state, and was in a state for temporary or transitory purpose. So if you claim you're resident, then it's taxed on income from anywhere. Now they further define domicile. So on page 5 of the instruction, you can always go back to where I just highlight in yellow, domicile. And domicile is what I wrote, presented earlier. It's a place where you have a true fixed permanent home and principal establishment, and to which place the individual has the intention of returning. So say, for instance, if you're from, say, United Kingdom, and you intend to return to United Kingdom, then Hawaii is not your domicile. But if you left United Kingdom and you don't intend to go back, then Hawaii could be a resident. But if you're F1, then you're non-resident automatically, unless you stress that I'm not going back, you know. But most times, automatically, by virtue of F1 status, through the tax instruction, you're already a non-resident. And so hopefully, like I said, you have this instruction booklet because that's where you can reference back to. So for page 5, top right, you see the examples, 1, 2, 3. Under example 3, this is what I've been talking about. It says foreign students who are granted entries into the United States on F visas are non-resident for tax purposes, Hawaii tax purposes. Researchers and faculty members who are granted entry in the United States on H, J, and Q, and who have been here for more than 200 days may be considered Hawaii resident. So this is the direct verbiage from the instruction. So a lot of times when they write things in the instruction, it's very in a broad sense. So they're hoping that if you're F1, most time you're going back to your home country. So therefore, they put something like this. Whereas if you're J, even if you're J1 student, there might be a chance you stay here versus F1. So that's why they wrote what it is. But that doesn't stop you from taking a stance. If you believe you're never going back to your home country other than visit, then you can say you're a resident, assuming you've been here more than 200 days. So if you can just go over that and see what it is. So it's pretty much a position that you're taking most times, unless you're happy with the F1 automatic non-resident. So it's the exception case where you would think you need to take a stance. But if it's F1, the automatic stance where they're consider you non-resident, you're not taking an exception. You're following whatever they saying. So it's very important to understand the words in the instruction. So hopefully you can print out that if you wanted to make a reference to it. So this is the special rule on page 8. Special rule for a non-resident or part-year resident who file a joint return. You and your spouse will tax on combined world income. So if you're, non-resident or part-year resident who file a joint, you have to do it on a worldwide income. But most time, like I said, the word non-resident in this instruction could be for people from New York, people from California. So that wouldn't apply to you if you're from a foreign country, because you wouldn't file a joint return. You would have to file separate. So this is just another verbiage for married filing separate. They must file separate return. However, if you're non-resident or dual status and you're married to a U.S. citizen, so if you're married to a U.S. citizen, you can file a resident return and file jointly. So now we're going to the N15, which is what you've been waiting for, I think. So this person and his wife, and he has a kid, he will file a tax return. But even if he's married, if he's a non-resident, it will be only reported on his income, not her income. So in the example, we have her income. Make sure you don't add her income. But you need to report her name on it on line 3. So on line 6A, you put only yourself, and there's only one exemption. And if you remember the W-2 7896, column A is total income. So column B is Hawaii income. Assuming total income is from Hawaii, then column B is the same as column A. And 1319 is the tax refund. He had tax refund. No, that was the scholarship, I think. It's in, and you need to add it back. On line 19, his own scholarship is $2,000. So therefore, that's why the Hawaii column B is bigger, because on the federal return, you don't need to add in the $2,000 because it's tax exempt. But Hawaii does not recognize tax treaty. So you put in the $2,000 on line 19 on column B. So it makes the total in column B bigger than column A. Yes, can you use the mic, please?
So I have a question about the item 17, because it says it's rent.
There's a question on item 17.
Yes. Does that include the rent fee, payment to the dormitory, for example, or other?
Oh, no. All
housings?
this item from 7 to 20 is income. What payment of rent is expense.
Yes.
No. This is if I give you rent. I rent from you. This is rental income, not rental expense. If someone pay you rent, it's not you pay rent. This is rental. Like I have a house, I rent to you, you give me your rent, then that's what I put, not what you pay. you're doing your tax return, so you didn't get money for rent. This is all income. So all the items here are income. It's not what you pay out, not that. Okay. So now once you get the line 35 adjusted gross income, then you figure out your line 38 itemized deduction. Itemized deduction, as I mentioned, is state taxes. So you can deduct, you can subtract from your income. So if you remember on W-2, $696 state taxes, you can deduct that. And as I mentioned earlier, it has to be ratio. So column B total on line 35 over column A total. And obviously it's more than 100%. Then therefore you can tick the whole 696. So you subtract the 696 from 11,215, then your net amount is 10,519. And you always can subtract your personal exemption. So on 42A, 1144 is always the number you can subtract from for each person. And because you only file for yourself, you're always going can minus 1144. That's it. So you subtract 1,144 from 10,519. Your taxable income on 43 is 9,375. So using the tax table on the back of the instruction booklet, the tax is $362 on 9,375. So this is just a bigger page of page 3. And this is the actual tax table on the back of your instruction to that booklet for N15. And to get 362, that's how you calculate. You go to that column, single and married filing separate, and you go to the other 2 column on the left where your number lands, that range, and the corresponding number is 362. So anybody have questions on that one? Okay.
Sorry, just to see if I understood well. So I take the full wages and deduct the federal income tax or the state income tax?
You cannot deduct federal income tax.
That I don't. So I deduct state income tax
Yes.
and 1144.
Yes.
And then I get a net on which I have to pay
Calculate
tax.
the tax. Calculate
I
tax.
understand, thank you.
Okay, so if payment is $696 from your W-2, then you overpay in this example $334 because your tax calculation was $366, but you already paid $696, as you can see on the W-2. Then your overpayment is $334, so you should get a refund of $334. So again, this is the summary sheet when you're doing N15 in reference to W-2. So the numbers on the different boxes in W-2, you can relate that to N15, and on the right side you can see what line, what page you should put in and what column. So hopefully, if you only have W-2 and 1042S, those should be the correct procedure for you. So I think that would be it for the exercises, but just a few slides, final steps. After you complete your tax return, make sure you check your math. Did you add it correctly? Did you subtract correctly? Did you figure out your tax amount correctly? Use a ruler if you need. Check every line, review your math. Make sure the tax table is correct. Sign and date your tax return. And attach all your required forms. Required form is the W-2 has a state form. It has federal form and a state form. So make sure you attach the state one. Just like the 1042S has a state copy. And it's due April 28th unless you get an extension. And make sure you send it to the correct address. If you have a refund, that's a different address versus the payment. Oh, okay.
I have a question since for my last 6 months of 2016, I work as a postdoc in my department, but I haven't has a W-2. I only have a income report from my department. Should I also attach it for my Hawaii tax purpose?
The question is, she has a income report working as a postdoc in the last 6 months of the year, and what should be the correct attachment. From listening to what you just tell me, I think my question would be, why didn't you get a W-2 on the last 6 months?
Because I'm not counted as an employee. Employer.
Okay, if you're not an employee, then you should have gotten like a 1099.
No, only because I only get check per month from
So
my
that means
department.
you weren't getting a wage, you're getting a stipend, which is just a payment. And that means if I don't know if they consider you a resident alien, because if we're giving you a scholarship that we classify as a resident alien, as I mentioned 2 days ago, the university is not required to issue you a 1042S, because 1042S is only for foreign people from foreign country that's classified as non-resident alien. So the first question is, are you a non-resident alien, which we talked about 2 days ago? Did they classify you as resident alien?
I think I was classified as resident alien.
Yeah,
in
if
my
you're resident
department.
alien, the university will not issue you a 1042S. So there is no statement, but the department can run you a summary, how much they pay for you, and you can use the number and put it on the tax return. You don't need to attach that statement, because you know it's not gonna be useful. It's not a required attachment.
Okay.
But you can use that as a reference and pick up, oh, in the past 6 months, this is what I got. So in case there's a IRS inquiry, if IRS asks you, then you can say, oh, this is my statement from UH, they printed it out. So you report whatever it is. You don't need to attach it.
Okay.
So again, you know, there are so many different situations at UH. You need to ask yourself, are you resident? If you're resident, there's certain things that we don't need to report because it's too confusing. We don't know if that's scholarship. We don't know if that's, you know, for something else. But as an individual, we're responsible to report the income for ourselves. So, and if they catch you, then that's when, you know, maybe, you know, you need to figure out, did you do it correctly? Because from the get-go in the United States, you gotta do it correctly. And then if you don't do it right, then you gotta get it correct. You have a question?
Okay, so really quick, this is the first time I do this. I know I'm a non-resident F1, I get that. I'm looking at this, and there's federal income tax and state tax. So I'm just confused, what forms do I need to fill for the state income tax? And what forms do I need to fill for the federal income tax?
Okay, we had a federal workshop yesterday, 2 days ago. Then you can look at the PowerPoint for that. But for the state tax form, as I understand you're F1, then you're doing N15. And are you looking at 1042S that you're holding, the form?
This is W2?
Yeah, W2 is box 17. You have state taxes withheld, right?
Yes.
So that amount will go into line 30 something.
Okay.
Let me see. If you're F1, then we recommended that you should do the N15, and on your W2, line 7 would be your wages, which is the box 1. So if you look at this, that was in reference, you have a W2 box 1 amount on the left side of your screen, and on your N15, the corresponding column, it says report amount on line page 2, line 7, column A and B. So if you can follow this particular set of information, then you should be okay. But this is only to help you what's on W2, but there's other lines you need to add. But these are the key transfer of numbers from W2 to N15. But you still need to add and subtract if you need it. You don't just fill out those 2 lines, like, line 36, etc. If I say put it on 7, then they said, what is the amount from 7 to 13? That's line 10. So you got to put in line 10 too. So that last page is to help you directly put the numbers from W2 on that line. But you need to add, when there's subtotals, subtotal line, total line, your tax calculation, etc. So this last one is to help you transfer from the amounts reported on W2 onto the tax return. But that's not the only steps you need to do.
So just to summarize, N15 is for the state
Yes.
tax, and there's another form for the
Yes.
federal tax.
Yes, for federal it's 1040 NR or 1040 NR EZ.
Okay, thank you.
Yeah, so it'll be posted on, it should be on the ISS, International ISS website. Okay, go ahead.
The first question, is there a way to fill up this form electronically?
Not for the state.
Okay. Second question, on Tuesday, I explained my situation because I had like 2 jobs. I was a research assistant, and I also had a CPT working on campus job. So, but I just got my W-2. And I went to my department, and they don't know anything about the 1042. And I checked the list, my name wasn't there. So I just wanted to know, like, am I doing something wrong if I just do my W-2 form?
Well, my question earlier to the other person is, are you resident alien or not?
No.
Because if you're resident alien and you're getting money, then that's why you didn't get another form. That's why she didn't get a form. Remember, she just asked.
In 2016,
Yeah, so
August, so no.
2006. The best thing to ask yourself is, did you report all the amounts that you receive? And if not, why didn't you get the rest of on a form? Because you're asking that you think there should be another form, right?
You told me that I should have the 1042. That's why I'm concerned.
Well, you either have W-2 or 1042.
I have the W-2, but I didn't receive the 1042.
Okay. Then is the W-2 reflecting everything that you have gotten?
I don't know.
Oh.
Because it says year-to-date gross earnings, combined amount from all pay statements.
Right.
So it should have everything?
Well, if you're only expecting W-2, then you just transfer the number from the W-2. But if you have 2 different places, you work for Department A, you work for Department B.
Oh, the same
then,
department.
Yeah. If you work for only one department, you either get a W-2 or a 1042S. You wouldn't get both.
Oh, okay. I thought I needed to get
No.
both. Oh, okay.
Yeah. So 1042S is for stipend scholarships. W-2 is wages. If you do work and they tell you, oh, come here and work 2 hours, and come here Friday and work 2 hours, and then we will pay you so much per hour. That's the W-2. Versus, oh, here's a check for 1,000 every month. That's more scholarship. So that's 1042S.
Assistantship is not a scholarship then.
I don't know what is the.
As a research assistant, they pay for my fees and. No. Okay.
So, yeah, it depends on I would check with the department, is all the money that I'm getting reported? And if the answer is no, then what happens to the rest?
Okay. So for me to check the amount, should I just check like the statements from when I received the money? That's what you said, the cash thing, right?
But even the statement, if you're on wages, you're getting net. Like if I'm making $3 an hour, I have tax of 30 cents, 70 cents, I might get a check of $2. But that doesn't mean I make $2.
Okay,
I make $3. because tax was taken out and ended up with $2.
Okay.
But you got to report the gross of $3.
Okay, so just I can check if both are
Yeah.
here. Okay.
Yeah.
And what is a there's a premium conversion plan reductions. What's that? Do you know?
The question said there was a training conversion plan reduction. I'm not familiar with that. Is that on a W-2?
Yes. The second line in the list of it doesn't show here.
Not certain what that is.
I don't know. I think the best thing, those are specific items that the department might know.
Okay.
So, yeah.
Okay. Thank you.
So, okay, go ahead. Can you turn on the mic, please?
Oh.
Yes, I'm wondering that because last year I had 2 different jobs in 2 different states. If I would like to do my state tax return, should I do it separately or together?
When you do a state return, if you have multi-state, like say California and Hawaii, you always do it separately. However, it's a little bit complicated. Say, for example, if it's California and Hawaii, you need to figure out which is the resident state, which is the non-resident state. And I would suggest, you either, hopefully you can learn by going on the web or hire someone to do it. Because when you have multi-state, say for instance, you have Hawaii and California, you need to decide which one is the resident, which one is the non-resident. Meaning, which one are you staying in here to qualify as resident? So in our definition, if you've been in the Hawaii 200 days, but you're F1, then you're non-resident. Then what about California? You gotta take one of them as resident because you pay all the tax on the resident one. So if you be a resident, this is a more advanced class if you have 2 states. If you take the resident, you need to report total. So say, for instance, you made $100 and $200, and this is the resident state, you need to report tax on $300. Then you only report tax on the other state, like say if Hawaii. Then you need to take a tax credit because you pay 2 states in one on your resident. So to make a long story short, it's a complicated situation because you need to decide which state is resident, and on the resident state, you need to add both numbers and pay tax on both numbers. And then on the other one, you only pay tax in that particular state, but you get a credit of the ones you already pay on the redundant state, on the same state, on that particular one state. So if you already pay California, Hawaii in this one, in the California tax return, as a resident of California, then the Hawaii is only on the Hawaii tax. Then you subtract what your Hawaii tax is by the tax you already pay in here. So it's a complicated one because you already pay 2 state tax in one, then you pay tax in Hawaii only, then the 2 states, you minus the Hawaii tax you already pay. So it will make it fair. The only unfair is the proration, because tax on $100 in Hawaii might be different tax on $100 in California, because the rate is different. So I would suggest when you have multi-state, it's better to hire a professional, unless you can figure out, But if you only have W-2, it should be pretty straightforward. It's basically if the 2 W-2 is $200 and the Hawaii is $50, then your resident state, you should pay $150 because 200 minus 50. And then the Hawaii one, you should just pay 50. So total, you're still only paying 200 around there. The only difference is the rate differential. So, any questions from Kapiolani? Okay, please turn on the mic.
Hi, I'm checking the ISS website. Could you tell us where on the website we can check these slides?
Viet, can you tell them where on the?
Oh, I don't have the site in front of me, but I believe if you go to the menu at the top, it's under employment, and then it pulls down a menu where it says tax workshop, I believe. Can you confirm that?
Yes, thank you.
Okay.
Okay, great. Okay, question over here.
So tomorrow at ISS you have some kind of a counseling for the forms for the taxes. That's what I saw. It's on some schedule.
No, we had originally sent out an announcement about the financial literacy program offering assistance with tax income tax return completions, but they have since announced that all the appointment times have been filled up. So yeah, please don't go to them anymore because they'll have to turn you away. So all the appointments are filled up for financial literacy program.
Yes.
I have a question about my status. I consider myself as an F1 visa, so non-resident, but I have 2 children with me. And look at one of the slides had a chart on how much the federal income will be. I consider myself head of the household. And is there any having a 2 dependency deduction or medical cost that goes?
The question is, if you're F1 person and you have 2 children, would you report the 2 children to get the dependency exemption, which will allow you additional deductions? My answer to that is, if you take the position as a non-resident, then the answer is no. If you take the position as a resident, then the answer is yes. But can you prove to the state of Hawaii that while on an F1 status, is Hawaii your domicile? Are you not returning to your country that you came from? If you can establish domicile. But if you're taking N15, then the answer is no. If you're taking N11, answer is yes.
How is state of Hawaii gonna ask you these questions, or how do you prove this, that you want to be here?
You will prove it when they ask you. So it's not like you need to make copies of your I-20, but if they ask you, then you better have the correct document. Because you're looking at millions of people, and you look at millions of attachment if everybody's attaching. That's why they're trying to minimize the attachment to like W-2 and 1042S. So the United States and Hawaii is a self-reporting process, and you only require to attach what is instructed for you. And other than attaching copies of W-2, 1042S, you're not required unless they ask you to. Oh, Capitan, I have a question. Go ahead.
So I'm just wondering. So if do I need to pay Social Security tax? It's withheld from income. So some are withheld, some are not. So I'm not sure.
Again,
So then, I'm going back to Japan this September. So maybe I don't get any Social Security in the future here.
Okay,
Do I need to pay for it?
I understand your question. 2 days ago in my federal tax workshop, I mentioned that under FJ, M, or Q visa status, there should not be any Social Security tax taken out from you. Had the department know that you're F or J status. So you need to notify your department that Social Security tax should not be taken out from you. Because a lot of times, if you understand, in a normal situation, when someone gets hired, everybody thinks everybody is U.S. resident. So they don't go through the specific questions whether you should be exempt from Social Security tax. But there is a IRS tax rule that says if you're F or J, you shouldn't be taking out Social Security tax. You meaning the University of Hawaii, or you meaning the employer, which is University of Hawaii. So if you see Social Security tax taken out from you on your W-2, that doesn't mean you cannot get a refund. You can get a refund on the tax return. On the tax return, if you need to report it correctly on the 1040, but I'm not sure on the 1040 NR or NREZ that you can do that. But on excessive Social Security tax, there is a possibility, or there could be a procedure with the department request to get a refund of the Social Security tax. But it's a complicated situation because once every payroll is done, the UH is already pay Social Security, the tax that is taken out from you. So it's a long process to get a refund directly from IRS versus if you do it on the tax return. Has that been going on for more than a year? Is it like 2015 or only 2016?
Sorry?
Did they take Social Security tax only from 2016?
Yes.
Were you here before 2016?
From 2016, only.
Okay,
Only
yeah.
2016.
So the first step is to tell your department they shouldn't take Social Security tax from you starting now from 2017 because you're F1 status. But as far as the 2016, you can either try get it through the filing the tax return, or you need to ask the department if there's steps you need to take to get a refund on a 2016. But that means they need to correct your W-2 if they're going to refund you, and therefore that might take a while. So you need to tell the department what and ask them what is the
which
best
department?
way.
IRS?
The department that you work for.
Oh.
I don't know what
Okay.
department you work for at KCC.
Yeah.
You need to tell the department that you work for.
Okay. But
Okay.
actually, I
So that would
reported
be-
I am a F1 student to my working place. I already reported about my status. I'm a F1 student, but they still withheld it. So
That's why I mentioned I don't know if they know you're F1 student, and or even if they know, did they process it correctly, that they shouldn't have taken out Social Security tax. So it all starts in the department that you work for. You need to tell them that.
okay, thank you.
And I can provide you the tax statute if you need, but I need to go back to office and reference and give you the citation of that IRS
Okay.
statute.
Oh, can I get the information? So
Hey,
if I-
maybe Viet can chime in and mention his possible solution.
I was just going to ask, are you the one that said that you had passed the substantial presence test previously?
Sorry?
Yeah, were you the one that said that you had been here since 2011 or something? Or no? You've been here a long time? 5 years
Yes,
already?
I came here 2011,
Right.
and then
So if I was wondering if she passed
Even if
substantial
you pass
presence.
the substantial presence test, as long as you maintain F1 status for Social Security tax, it should not be taken out for Social Security tax, even if you pass substantial presence test. So still my suggestion is check with the department that you work for. Tell them Social Security tax shouldn't be taken out.
Okay.
And
Okay.
you just mentioned 2016, but yet did you not work from 2011, 12, 13, 14, 15? Oh, okay. So at least the situation starts from 16. So you need to tell them they need to start correcting it for 17, and what is their recommended corrective action for 2016. Because if they're going to correct them and do it for you, then you cannot file your tax return until they issue you a corrected W-2. Versus you can use your current W-2, but you need to file the numbers and request it by filing the tax return. So there's two ways of doing it. File it with the tax return and asking for refund of Social Security tax, or asking the department to go through steps to retrieve the excessive Social Security tax that's been taken out from you.
Okay.
So there's two options.
Thank you very much.
But either way, you should tell your department to not take Social Security tax from January 1 to onward. But 2016 also needs to be corrected.
Okay.
Okay.
Thank you very much.
Anybody else have questions? Okay, go ahead.
I understand that I won't be able to get the reduction as a dependency for my children, as I am on a non-resident. Is there any items that can be deducted? For example, like medical insurance. I received this 1095B form.
Yeah,
says health coverage.
1095B form is just to say that you're covered by medical. Yeah. So.
It doesn't mean that anything.
No, because a lot of times medical premium can be a deduction, but it's subject to 7.5%. So say, for instance, you make $10,000, you have to exceed 750.
For the medical cost.
Oh, how much? 10%. So if it's a $10,000 income, and 10% of 10,000 is 1,000. So if your total premium is below 10,000, you cannot deduct anything.
Okay.
So that's the first thing you ask yourself: is the medical premium exceed 10% of my AGI, adjusted gross income? If your adjusted gross income is, say, 10,000, then 10% of 10,000 is 1,000, right? So if you pay even 2,000 on your medical, you only can take the excess. So 2,000 minus 1,000, then you only can take 1,000. But if it's below 1,000, you get zero.
You have to quantify that by. You have to quantify that by. If you have a W-2 and you work for the state of Hawaii, in other words, for the university, and they deducted medical payments, and that's why you look in box 12A and it has DD on it, and then a specific dollar amount. Those were pre-tax dollars taken out from your payroll. So those items is not deductible. If you have to pay out of pocket for medical insurance, dental insurance, or whatever, out of pocket expenses, then those are deductible expenses.
Yeah, that's correct. Because, say for instance, a simple example is if you make $1,000 a month and you have insurance of $100, because it's pre-tax, your total income is $900. The university wouldn't consider your income as $1,000. So pre-tax means $100 taken out for your insurance before they start taxing the calculation. So the tax is on $900, and therefore your income, gross income, is $900 when it's pre-tax versus $1,000. So because we took it out, there is no income array. $100 decrease from your total income. So your correct total income for that month is $900. Even though you made $1,000, then pre-tax is $100 for medical insurance, then your total income is $900. It's not $1,000. And therefore, you don't even have consideration for insurance premium for that. if it's done through payroll. So that would be it. If there's no question, hopefully you can do the tax return, and if not, please refer to the PowerPoint. And good luck, and hopefully all of you get tax refund. Thank you for coming.